Hey guys, welcome back to IMFL. So you want to own your own home? Today I'm joined by my lovely husband once again to talk to you a bit about what it's like to own your own home, the process, and some of the pros and cons, some of the hidden costs that you haven't thought about. So join us as we go through a few questions. Welcome back, guys. So the way we're gonna do it, I'm gonna ask you some questions, Richard, and then you're gonna ask me some questions as well, and then hopefully we'll answer a few questions that most new homeowners or homeowners to be like to ask. So let's get started.
Yes, and before we do proceed further on, it is important that we also put a disclaimer in place.
Disclaimer.
Very important disclaimer that we're not offering any advice. We're by no means regulated advisors in this department. We're just providing information that's been privy to us so that people can make an informed decision. Disclaimer done.
Bing! All right, let's start. So can I start first or you want to
Go
start
for
first?
it. Ladies
All right.
first.
So, help to buy versus saving for the whole deposit. Which one and why? Help to buy versus saving for the whole deposit. Which one and why?
And why? Okay. Personally, I would opt for saving for the whole deposit. In my understanding of saving for the whole deposit, we're looking at about 10%, 15%, or whatever you can afford as a big deposit. For me, as high a deposit as possible is always advisable. Help to buy schemes are quite good. I'm not sure what sort of help to buy they have at the moment. I know they used to have a 5% one.
Yeah.
They've also got the equity loan sort of criteria, the shared equity sort of criteria.
Yeah.
But you would find that the interest rates are fairly high, which means, especially in the first few months of your mortgage payments, you'll be paying a lot more interest than you will be of the capital. So if you can save a big deposit, then do so you can reduce the interest that you're liable for. That's my opinion.
Great.
My turn? Mm-hmm. Okay. So, does the location matter? Does the location of where you buy matter?
Yes. Do you remember that series that came on the TV? It's been on for ages. Location, location, location.
Oh, yeah.
Yeah. So I think that's where they get it from. The location can be very important, depending on obviously your likes and dislikes and what's important to you. I think obviously if you're going to own your own home, the likelihood of you owning it for a long time is very high. Therefore, try to get it in a very decent location, depending on where you like. Like, for example, I love London, so if I was to get my own home, I would look at buying somewhere in London just because I like the city life and I'm not really a country girl, so I like it. I like the pollution, unfortunately.
Concrete jungle. We love the pollution. We just love it.
You've also got to look at things that matter to you. So, for example, if you're a parent and you've got kids and you want somewhere where it's in local proximity to good schools and stuff like that. For example, having your house near a train station, like let's say it's near a tube line somewhere in London, can really put the value of your property up, which is a good thing because it means you'll be getting a lot more equity at the end of your mortgage term. However, if you don't like noise or if you're very sensitive to noise and you don't want to live too close, because then obviously noise pollution is going to be an issue for you. So in a nutshell, I think location matters. It'll be good to shop around and get a feel for the sort of things that you like. Do you want fresh air? Do you want countryside? Or do you want somewhere where there's buses and taxis and Ubers and stuff like that? So yeah, location matters.
Okay. Actually, can I just add something to that?
Of course, go ahead.
That's all right. So the location is very important, as Moab has already said. Not only for those that are looking to buy residential properties, but also for landlords, buy-to-lets. It's also very important in that regard. One good thing to do is to actually look at what sort of projects to be undertaken in that area. So if there are going to be new schools, new train lines, new transport access, all of those things are very important. Because what you do is you allow yourself to have room really in terms of how much return you'll be getting from that property in the long term. So I think it's a win-win really location wise. It's not smart not to look at that.
So look out for the next Westfield that's being built in your area, guys, and get a house there.
Hint, hint, Croydon, hint, hint. Hint, hint, Bradford, hint, hint. Okay, cool. My question.
I thought it was my turn.
Is it?
Yeah.
Was that your question?
Yeah.
Okay, go for it.
And you added to it.
Sorry. I thought that was my answer, but anyway.
Let's go.
That's
Question
fine, go for it.
2. How important is having a healthy credit score to the buying process?
Wow. This is a big one that a lot of young people have fallen trapped.
Yep.
And
Trapsters.
yeah, it's a very big one. I mean, a lot of people took out big student overdrafts before going to university, took out credit cards, anything they were being offered really. The Vanquishes and the what were those guys called? Capital One. Yeah, those sort of cards. They really got people into trouble when they went to university. The credit process is probably the most important in my opinion. One, because it limits whether you get a mortgage in the first place, as well as who can give you a mortgage. You would find that the ones that are likely to give you a mortgage with a low credit score would combat that risk with a higher interest rate. So what you're gonna basically find is that you're getting the worst part of the bargain at each point, even if you do get a mortgage. Some would look at defaults that are only 3 years old. Some won't look at it at all. The best banks won't look at it at all. So your credit is very, very important. I would opt for at least a fair to start the process. And if you haven't really got a good credit, then I mean, I'm sure we could talk about some of those things anyway, but it's very, very important. If you're in university or if you're in sixth form, you've just got your first bank account, please, please, please look after your credit. It's going to come back and bite you if you mishandle it. Yeah. So the credit side is very important.
Yep.
That actually brings me to the question that I was looking at for you.
Yep.
Right? Because I know that you've got a very, very good credit score. I'm not going to allow you to show off, so I'm just going to ask you the question. Just go on with it.
I wasn't planning to.
Cool. What is one thing you did to improve your credit score?
Okay, I'm going to choose one. I think one of the major things that I did that has really, really helped build up my credit score was to get a credit card. Now, I'm sure most of you are going to be thinking, wait, hold on, but am I not contradicting Richard? You can actually take out a credit card and be responsible with it and make it work in your favour. So what I did was, when I started uni, I applied for one of these simple bank-related credit cards. As opposed to some of the other ones that aren't linked with particular banks. And it had a very low limit at the, not slow, I said low, by the way, low limit to begin with. And so what I used to do is, if I knew that I had, let's say, £50 and I wanted to shop at a supermarket, Tesco or Asda or something like that, what I would do is when I did my shopping, I would use my credit card to purchase the items. And then as soon as I walk out of the shop, I would then transfer the £50 that it was on my debit card that I would have used initially onto the credit card to pay it off. So I always made sure that I cleared the balance. And technically, I said to myself that I know that this is like a make or break. Credit cards can literally make you or break you in the sense that they can completely destroy your credit, and you don't want that. So never spend money on your credit card that you know you don't have or won't have coming in. And even for the second point, the latter point, it's so important because sometimes you might be expecting money to come in, but then something happens and, you know, somebody who owes you money doesn't pay. And it's not worth soiling your credit for. So make sure that, yes, the money's visible. Yes, I can afford what I'm buying on the credit card. And I can afford to pay the full payment, not just the minimum payment. Because the problem with having the minimum payment is that you pay the minimum payment and it looks okay to the bank, but then interest charges will be added to it. and then it makes it harder for you to pay back the actual amount that you borrowed. So if you can pay all off and you start to utilize it in such a way, they will then increase your credit limit every now and again. So periodically they will send you a letter to say that they want to increase it because you're using your account really well. And that's how you build it until you build really good rapport with the bank. And then whatever money you're looking for, when you go and ask them, they'll give it to you. And you get really good rates and really good deals. So yeah, that's it, Richard. That's one thing that I did that really improved my credit score.
Yeah, and her credit score is very good, by the way. So take those tips and it'll help. Cool. Is it?
Question 3, thanks. What are some of the hidden costs of owning your own home that most pre-home owners don't consider? I like this one. I'm going to say it again.
Yeah.
What are some of the hidden costs of owning your own home that most pre-home owners don't consider?
So are you referring to the process or actually post-process once it's completed?
I think we're talking about hidden cost of owning your own home. So the actual process to be able to say, okay, I've got my keys. What are some of the hidden costs?
To completion.
That's it. Okay.
All right. So that's quite an interesting part. In fact, I would say before you start the process, ensure that you've got a holistic view of how much you're going to need. In fact, even before you start saving all the money, find out when you go to conveyances, websites, you can get quotes and it'll outline your stamp duty responsibilities, it will outline how much your searches are going to come to, it will outline all the other hidden costs really. So more or less when you start the process, you are going to need to look at a booking fee for the mortgage itself, which you can either choose to add to the loan, or you're going to pay upfront. So some banks call it booking fee, some banks call it product fee. Obviously, if you're going to use a broker, then you're going to have fees for the broker as well. It depends on the broker you're using. So initially, with the mortgage side, you're going to need a product fee. If you're paying that upfront, you're going to need your broker fees if you're using a broker, and you're also going to need valuation fees, which would, a lot of the time, depending on the bank you're using, would depend on the property's price or the property's value. And then once you've obviously got your mortgage offer, that's the mortgage side done. The part that the conveyances quote is going to really show you is the solicitor's cost. So I would say shop around for the best solicitors that could, one, provide you the service you need and the time you require, but at the same time at a fair price. So look at the solicitor's base cost, which is the cost that the solicitor is charging you for the work they're doing, and then you're going to need to look at your land registry fees, your search fees, all of those sort of fees. Your stamp duty is probably the biggest one. If you go on the is it the HMRC website, or if you go to stampdutycalculator.org, I think it is.
They brought that new rule, isn't it, that if your property's 300,000 or less, then
there's no stamp duty, of course.
So that helps a lot.
However, if it isn't your first property, and you have another property, or you're not selling a property to buy another one, then you're going to have to pay a 3% stamp duty surcharge anyway,
costs,
which is extortionate. Seriously.
Not that we're complaining.
Well, you know, we do love you, Chancellor. But yeah, that one does sting. So yeah, you need to look at all of those costs. But as I said, if you go on the conveyances website, you can get a quote for some of these hidden costs. So by the time you've completed, you're going to need to look at that. If you're doing a buy-to-let, you're going to need to get landlord insurance, which is also another cost. It's by law, you must have landlord insurance. So
did you mention the deposit itself?
Well, yes, I think that goes without saying.
Yeah, I wouldn't say that's a hidden cost.
Yeah, I won't call that hidden. I mean, make sure you've obviously got the deposit money. In fact, a lot of the banks will ask you for proof of deposit anyway. So you're going to need to prove it. In fact, they don't only ask you for proof, they ask you for a breakdown of how you've built up that money. Yeah, so be very vigilant with that sort of thing.
So like, what if, this is just a bonus I'm going to throw in there.
Yeah.
If, I don't know, an aunt or a grandparent has lent you £10,000,
Yes.
how can you account for that?
Yeah, so what you would do is the amount that you've saved yourself, you're going to need a statement breakdown. A lot of the times in a savings account, you're probably going to look at 12 months bank statement to prove that you've accumulated those funds yourself. But for the part that is being gifted you, you're going to need a letter from your grandparent, signed by a grandparent, and it would need to say that, one, it is a gift and it's not going to be repayable, and two, that the grandparent is giving you that money, but they're giving you that money without a stake in the property. So they're not giving you that money to say, I hold 10% or 15% of the property. No, they're giving you that money with no stake in the property. Yeah. So that would need to be detailed in a letter, and the banks will accept that. As I said, this is not advice. It's just based on our own experiences in the process. And one thing before I forget, if it is a grandparent or a mother or an auntie or a father, whoever it is that's gifting you that money, they would not need to give a breakdown of where they're getting the money from. A lot of the time, the letter will suffice. So I guess that's something that we could breathe a sigh of relief on. Yeah. So yeah, that will be it. Your question now.
Yeah.
So I really want to buy a house, but I don't earn enough. What do I do?
Okay. So you really want to buy a house, but you don't earn enough money. So in terms of salaries, from what I know currently, most banks, building societies and stuff that will do lending will do about 4.5 times your salary, possibly 5. Am I right, Richard? That's pushing it.
It depends.
Yeah, but let's say you did find someone, the upper limit would be 5. So let's stick with 4.5 times your salary. If you've done that multiplication and your figures are still low, the only thing that I would possibly advise is looking at buying with somebody else. So perhaps if you have a sibling or a friend, somebody who you trust, that you know that you could perhaps start getting onto the ladder with. I always believe that getting onto the ladder is probably the hardest part, but once you're on there, it's relatively easy to climb it. So perhaps find a sibling or someone that may be able to fork out the other half of the money that you need. Let's say you have the whole deposit, for example, but you want to add a sibling on to the property so that their salary in addition to yours would make up the difference to allow you to borrow the amount that you need for the property. So that's one thing I'll say. I'll pass it to you, Richard. Is there any other way if they don't earn enough?
To be honest with you, I wouldn't want to go too much into detail on some of them. One thing that I would say look into is something called interfamily mortgages. I know Nationwide are very good at that. I'm not going to go too much into detail.
He's not advertising for that. Nationwide, by the
I'm not advertising for Nationwide at all. But I know they're one of the few that do it. Again, just go read up on it yourself. That's a good way to get on there if you don't earn enough.
What can you tell us a bit about the interfamily mortgages?
It will involve a property already owned by a family member. A lot of the time what it means is you don't need an actual deposit because it calls something a genuine bargain price, whereby the amount between what the property is actually worth and how much is being offered to you becomes your deposit. Again, you can read up on this stuff or speak to a broker.
Google's your friend.
Speak to a broker. They'll give you a bit more information on that. But yeah, the other side of what you could do is actually, if you don't earn enough, then reduce your liabilities. Reduce how much shows as a credit commitment to you. Even children are credit commitment.
8 grand a year, guys.
Yeah.
And we've got 2.
Yeah. So honestly, if you can, go on the bank's websites or go on any calculators you can find an affordability calculator and put in your information on there. It will tell you realistically how much you can borrow from a bank, so to ensure that you are in good stead when you're actually applying. One other thing, please do note that the banks have what we call a stress rate. So what they basically do is they apply a very, very high rate in the background of some of these calculators, so to ensure that if interest rates were to soar very high, you would still be able to afford your mortgage repayments. So if you find a figure which is like, well, this is less than 5 times my salary, 4.5 times my salary, that is the reason why they're lending cautiously at the moment, especially because of all the issues we've had in the past. So some of these little things you can look at. Look at your credit commitments, how much personal loans, hire purchases you have. Those things all deduct how much you can actually borrow. I think applying a lot of these things will be helpful. But if you're not there, keep pushing, keep saving. It will happen. It will happen, and you'd get on that ladder, and you'd build an empire for your family. So, yeah, I think I'm done for now. You done?
Yep. And remember the bit at the end of the mortgages when they say that if you fail to pay your mortgage, you may be
repossessed.
So yeah, make sure that you're financially there, emotionally there, spiritually there, physically there, whateverly there. Before you own your own home. And so that's it for us, guys. We had 6 key questions that most pre-homeowners like to ask or know about. This is just the first time we're trying something like this, so let us know in the comment section below if you enjoyed this, and if you've got many more questions, feel free to put it in the comments box, and perhaps we'll even do another video to address those questions.
Yeah, you never know. Yeah.
So yeah, thank you very much for watching us today and staying with IMFL. Thank you, Richard, for coming on once again and giving us some more insights into the process. And that's it for us for today.
That's it. Thank you very much.
Subscribe if you haven't already.